Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Friday, April the 30th, the last day of April, 2010. Okay, being Friday, we know today's market activity is a sentiment gauge of investors. Basically, if they want to hold over the weekend, that would tell us they are more bullish, and if they sell heading into the weekend, they're too afraid to hold into the weekend, as well they should be. And today's market was down. The Dow Jones was down 158.71 points. Oh, good Lord. If you're on the wrong side of that trade, that hurt. Let's start off looking at the Dow Jones Industrial Average chart. This is a 6-month chart, daily candlesticks. We see today is a substantial sell day, 158 points. The thing to notice about the candlestick here as well as here, both of these are continuation candlesticks. They are not uh, reversal signals. So stay on the short side right here. It's very, very easy to see that. We're going to go into some news they're talking about. As I've been saying, the real story is what's going on in Europe, the debt crisis there, the credit crisis there. That's actually what I believe is going to bring us into the Great Depression stage two, or just basically a repeat of the Great Depression. We're following the exact same fundamentals, and that means we're going to get the exact same results. Um, Okay, again, someone could draw a line out here and say, okay, what we're seeing here is this little pattern here, this little pattern here. Oh, look, that could be a flag. It's highly unlikely. Um, like I've said before, uh, when you've got the condition of down, then up, I'd like to have it just in 3, but in 4 is the same condition. Bears took control of this. Bulls tried to bounce back up. Bears said, no, we own this. So right here is, like I said, back on this day when just big sell-off happened. This is our peak right here. Okay, that's my analysis as far as that goes. And you need to stay bearish, as our long-term charts point out. We'll look at those in a minute. Now, I want to cover some headlines right quick. You've been hearing a lot about companies coming out and selling or showing good profits. Okay, you have multiple reasons for that. Number one, the good profits of this first quarter are compared to a horrible first quarter of 2009, at the point where people were literally burying money in the backyard. So yes, you're going to see that. Also, I know that Buffett came out and he was quoted as saying that his companies are showing profits, so the consumers are spending. Yes, but remember what Peter Schiff was talking about. You've also got a humongous spike in foreclosure rates, and that means people are spending money that they were using to pay their mortgages on. So for every thing a bull would throw up, I can toss out a reason why the Bears are still strong here. And I don't think any of it matters. It doesn't really matter what I think. It doesn't really matter what the news, how you analyze the news here. Any news about the U.S. economy is a waste of your time. Ever since Greece came out and said, as we expected, we can't pay our bills, um, nothing that happens in the U.S. matters anymore. Go back and look at 1929. Let's look at that chart one more time. This is the crash of 1929. Started here, 1929. It fell for until 1930, where it bounced substantially, just like we did from 2008. We fell and we bounced from 2009. We're into 10 now. They peaked in April. Now, during this time period, right in here, they believed. Let me get some tools out of here. They believed that this was the recession time, this was the recovery time, because every indicator they looked at said we were doing okay now. We were starting to come out of it, just like we're doing today. What happened right here and caused this to happen on breakdown was what happened in Europe. Okay, in Europe they had the default of Germany. Germany defaulted on their debt, and that caused problems in Europe, which then spilled over to the U.S. and brought us down. We're seeing the exact same setup right here, right now. The difference is, instead of it being Germany, it's Portugal, Greece, Spain. Some have tossed in UK, Japan. We've got several. Okay, even the U.S. is not sitting pretty. But the main thing to look at right now is uh, Greece. Will they get bailed out? I don't think so. It wouldn't be fiscally responsible. It would just open up the floodgates for all the pigs to come to the trough. And remember, let's look at our GDP charts. We can see right here that Portugal has been downgraded by the S&P. Greece has been downgraded. They're down to junk now. And as Professor Rubini said, Spain is worse than Greece. So when Greece says they can't pay their bills, it's just a matter of time, a ticking time bomb before Spain comes out and says we can't either. And as we've already gone over this chart and explained these numbers to you, this equates to 2% of the EU's GDP, 2.16% to be precise. And this and this alone would knock them back into recession, and this would take them much, much, much further into recession. Remember, I think my numbers, can't remember for sure, I believe it was 4.2%. The EU saw a loss in their GDP of 4.2% during that recession we just had. That hurt, right? I mean, everybody remembers the recession? Yeah. Okay, this right here, all by itself is 10%. A 10% hit to the EU's GDP. Now, remember, that's not all. We've also got Italy. You toss in Italy, which is another 14%, and there you go. Can't even see it on that chart. Let me go ahead and raise this up so you can get a better look at that. All right, Italy way up here, 2.3 trillion. That's 14% of GDP all by itself. Okay, you add all these up. Portugal, Greece, Spain, Italy, you're looking at 27% GDP just gone, erased from the EU. Okay, that is going to, that, like I said before when it happened, this is going to spread. We said that back when Greece came into play, then Portugal showed them, and then Spain, you know, all in 1 week. This is not a small little issue here, guys. This is monstrous. So whatever they tell you in the news about, excuse me, whatever they tell you in the news about, oh, we're seeing some signs of consumers coming back and spending. It does not matter at all. The same way it played out in 1930 is the same way it's going to play out this time. And it just may be bigger. Like somebody was arguing with me or discussing with me, however you want to look at that, the results, whether or not it would be different, because I was saying it won't be different, but someone always comes out and says it is. They were saying, well, this time the American currency is not backed by gold. Well, that doesn't mean you're not going to have a crash. It means you may even have a bigger crash. So again, this is the real news right here. What's going on in Europe, and that's what people aren't really talking about. But the market showed you today in this major sell-off, 158 points into the weekend. It's on their minds, plain and simple. You can't overemphasize that. Okay, let's look at our long-term charts. This is the Dow Jones Industrial Average. This is a 3-year chart. Each one of these candlesticks being 1 week. Here's that 8-week period they told you we were. The Dow Jones had gained consistently for 8 consecutive weeks. We told you that was above average. Look, we're selling, and we're seeing that as of this week. Now here's that signal again. This is the sell-off. This is the bounce, and now we're rolling over right there. Okay. The same thing happened in 1929 sell-off. Big bounce in 1930. Now we're selling off. The sell-off that happened in 1930 was due to European debt crisis, and guess what we have right now? A European debt crisis. Okay. Now also notice overbought condition signaled by the RSI indicator. This is my #1 most trusted indicator. It doesn't signal very often, but whenever it gets above 70 line, this line right here, it is overbought. When it gets below the 30 line, it is oversold. Right here, overbought, telling you to get out of this market, and you ignore it and you get owned. Right here, it's telling you to get into the market. You ignore it, you get owned. Right here, it's telling you to get out of the market. Well, there you go. You ignore it, well, you know what's coming. Okay, that's my analysis on the markets. I'm a bear here. 100% short my portfolio. If you want to see what's in my portfolio, go to our website. It is free. Sign up, check it out. Also gain access to our small cap alerts. We have a new one of those coming out this weekend, so you want to check that out. We'll also be adding to our website and finishing up that the new site upgrade we've done, so that's pretty cool. I did get an email from somebody saying that our site was now too busy for them. That's the only one I've received like that. So if it is too busy for you, just follow us on our YouTube channel. Okay, it's pretty simple there. Okay, let's look at our disclaimer right quick and then talk a little bit more about this issue. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit or loss or any other result. Jeez, that's a lot of words. Okay, you guys know what it means. I'm not